Let's take a look at Micron because shares are in the red this morning on the back of its earnings print. Despite beating the street's Q3 expectations driven by demand for its AI chips, Micron's Q4 guidance overshadowing those results. The chipmaker's revenue guidance is in line with expectations. Ultimately, though, investors are viewing that as a huge disappointment. The stock has been on a tear, though, since the start of the year. And taking a look at those year-to-date gains, up nearly 67%. Here with a deeper dive into these results and ultimately what it tells us about the AI excitement, we want to bring in Angelo Zino. He's CFRA's research analyst, along with Jake Silverman, Bloomberg intelligence analyst. Great to see and have both of you. Angelo, let me start with you. In terms of the street's reaction here, we are seeing a pressure on Micron shares. Is that the right read of this report? Because there does seem to be a lot of anecdotes and a lot of data points to be excited about in this print.
Yeah, no, so as far as kind of, the reaction to the stock price here, I mean, fairly muted in nature and, maybe rightfully so. I mean, you kind of saw, what they did last quarter, and it was kind of a nice beat and raise on both kind of the top and the bottom line side of things. I think going into the print here, there was an expectation out there from the street that you would again see kind of a very nice beat and raise type quarter. You didn't necessarily get that specifically on the top line side of things. But that said, I mean, you did get a lot of kind of good items that we did see. I mean, pricing looked very good on both the DRAM and NAND side of things, increasing about 20% sequentially on both sides of things. Margins look like that, they're holding up fairly well, and improving. The trajectory looks pretty good on that side of things. But I think the other thing maybe holding up the street a little bit is also kind of the Capex guidance side of things. The good thing is that they kind of threw it out there now, and we now have that unknown kind of thrown out there for 2025. And you're looking at mid-30s type of Capex or capital intensity rate going into next year. Probably compares to about 32% here this year. So it's going to grow faster than revenue next year, but that should be expected because of the growth opportunities there related to high bandwidth memory. So overall, it's somewhat of a mixed picture, but Micron is kind of trending in the right direction here.
Jake, want to get your reaction as well here. I mean, the company is talking about being able to drive robust price increases. Industry supply demand conditions continue to improve, rapidly growing AI demand, enabling to grow their revenue by over 50% in this most recent quarter. I mean, what is the read through, especially if things are as mixed as investors and analysts like Angelo are saying this morning?
Yeah, so overall, I mean, we believe that the fundamentals remain pretty positive. We're still remaining pretty optimistic on AI. AI is actually a pretty early stages for Micron specifically. They supply HBM into NVIDIA's H200, and they're going to expand into other customers as well as potentially additional products within NVIDIA's AI portfolio, such as their Blackwell GPUs. So, overall, we don't think this is specific read-through over into AI itself. As long as hyperscale Capex continues to increase quarter to quarter, and there's potentially some upward bias there as well, we remain pretty optimistic overall on AI spend, and we believe that Micron is going to be a particularly strong beneficiary of this.
Angelo, we also saw margins recover quicker than anticipated here in the most recent quarter. Is this a trend that you see continuing in the current quarter, and then the quarters to come?
We do. Again, this is, they're coming out of a pretty nasty downturn in 2023. We did see them finally get to profitability in that February quarter. 2 quarters ago, it was the first time in at the 5 consecutive quarters of year-over-year declines in terms, or year-over-year negative earnings. Kind of looked at that momentum continued in the May quarter here, but as you kind of look, we think into 2025, there should continue to be a favorable pricing landscape. High bandwidth memory takes up a lot more wafer supply out there. Part of the reason that you have the need for the higher Capex numbers out there, but also, that will continue to improve the pricing landscape, the mix, overall mix for Micron. And thus, we do expect them to hit record gross margins by the second half of calendar year 2025. So that trajectory should continue to improve. Ultimately, we think by the time you end this cycle, they could potentially see gross margins kind of get to 50% or even north of that.
I mean, in the meantime, Angelo, it sounds like those margins are really going to be pressed by capital expenditures. Exactly what type of spending profile do you expect a Micron to continue to exhibit as they are citing demand as the reason to spend further?
Yeah, I mean, listen, I think you kind of look at 2024 here, and that is a recovery year for the memory industry, right? So you actually have lower Capex spend in 2024 versus, or lower capacity in 2024 versus 2023. That's going to kind of bump back up in 2025. Now, again, the Capex number in 25, if you're looking at capital intensity ratio, it's somewhere in the mid 30s. Maybe we're talking about a 13 or 14 billion or so, run rate for Capex next year. Now, that said, I mean, again, it's all based on kind of the growth opportunities tied to these AI servers, high bandwidth memory. And, we think that, again, is the right way to look at this. Now, you kind of look going into next year. I think maybe the bigger question mark out there isn't necessarily what Micron's doing, but as you kind of hit more of an expansionary year in 2025 from a recovery year this year, what are some of their competitors going to do? What is Samsung going to do in terms of some of their Capex number, which is the big fish out there? So, that has historically kind of been the concern with these kind of memory upturns. So maybe that is also kind of a little bit of a read-through that you're seeing from some investors out there as we now kind of transition the story from recovery to expansionary phase.
Jake, real quick, going back to what you were just saying a minute ago, you said that you were pretty optimistic overall in AI spend. You think Micron's well positioned within that space. My question to you, at least comparing that to what we're seeing from the street's reaction to these results. I think going into this, many people were asking whether or not this report was going to show any hints of a slowdown in terms of AI demand. My takeaway, at least looking at this report, is very much supply is still trying to catch up with demand. Is that a story that you don't really see changing anytime soon?
No, I don't think it really is going to change. I pretty much agree. I think supply remains tight, demand continues to increase, and high bandwidth memory isn't the only story. They're also benefiting from other AI-related products like high capacity DRAM modules, solid state drives. So, ultimately, we just think that pricing will continue to improve as supply remains tight. AI spend continues to increase, and traditional servers, smartphones, and PCs, that demand recovers even at a more modest pace. So ultimately we remain pretty favorable on Micron's AI opportunity. So it's both high bandwidth memory as well as other AI related products.
Angelo, Zino, CFRA Research Analyst, and Jake Silverman, who is the Bloomberg Intelligence Analyst. Great to have both of you here. Thanks so much for discussing Micron with us this morning.